Thank you for tuning in to this instructional video for the Black Ops Trading spreadsheet. Okay, you will notice that there are many changes to this spreadsheet. And the changes that were made to the spreadsheet are hopefully to make it easier for you to be able to understand, comprehend, read. That's what we did here, okay? FH7 and myself, we worked a very long time on this sheet so that you could be able to make use of it and be able to understand what it is you're looking at. Alright, let's jump right into it. The first thing you'll notice here in column A is the My List. Now this is a drop down menu here, and it's broken down. It's actually taking from my personal hit list. You can use this list to do whatever you want. Okay, you can make it your own list, but what I did is I just made it easier so that you can see what it is you're looking at. In other words, I have included a breakdown of the things that the securities that I watch. So it has ETFs, Forex, futures, and stocks on here. Okay, so when you click it, it'll bring it up for you. It's also already embedded here in the sheet. So like the first thing here, Apple, you see it tells you it's a stock. It's under my hit list. It's a U.S. market, and we have the markets broken down between Canadian and U.S. markets. And then the next column over is the type of security again. This one is a little off, so I'm going to be working on this one. It's a little off for now, but hey, it is what it is. Okay, it's supposed to be like the my hit list, breaking down all the securities, but don't have the time or inclination to do that. And if you're new to trading, you should be sticking with the hit list anyway. All right, the next column over, what you see here is the security name. Okay, and the security's name is important because, all right, this column is important because it gives you the name of the security that you're looking at. So in the security name, it gives you the ticker symbol in the front of it, and then to the right of it is the description of it. And then the next column here is important. This is your status column. Okay, this is your status column. Under the status column, there's a embedded note here. If you just scroll over it, put the cursor on top of it, off to the right, it'll give you a breakdown of what each pulse wave status is. The first one is a confirmed pulse wave breakout, which is the best signal. The confirmed pulse wave breakout. Then after that, the aggressive pulse wave breakout. You remember the difference between the confirmed and the aggressive, if you remember the prior videos. A new one was added, which is the Q wave confirmation. We'll get into that more in detail in a few minutes. And then the NIP, which is not in play. Then the next one is the 2-bar Charlie breakout continuation. And then we have the 2-bar Charlie day trade. And then we have the weekly swing trade. Quick note, the confirmed pulse wave breakout and the Q wave confirmation, those two are your primary main signals that you want to trade. You can, for the most part, disregard every other signal and just trade those. That is the heart of the system. That is the pulse wave system. The confirmed pulse wave breakout and the Q wave. That is the heart of the system. The other signals that are in there are intraday signals, and we will get into more of that a little later on. This is just an introduction to introducing you to all the columns and everything in the spreadsheet. All right, the next column over is your pulse wave resistance price trigger. This is where you enter the market on a buy stop limit. The next one is your pulse wave buy signal. If there's a 1 in the column, then that is a buy signal. If it's a 0, that is a neutral signal, meaning you don't have a buy signal. The next column over is your buy trigger. This is your buy trigger. This is where you place your buy stop limit on confirmed pulse wave breakouts, weekly swing trades, 2-bar Charlies, and Q waves. Okay, all other, anything that's not an aggressive pulse wave entry point, this is your price trigger right here. Okay, the next column over is your confirmed pulse wave breakout buy signal. The next column over is your weekly swing trade buy signal. The next column over is your 2-bar Charlie breakout continuation buy signal. And then the next two boxes is your 2-bar Charlie intraday buy signal, and the 2-bar Charlie resistance price is your entry price. That's where you're going to place your buy stop limit on your 2-bar Charlie trade. Okay. Again, recapping, these three signals right here, columns J, K, and L, your confirmed pulse wave breakout, weekly swing trade, and 2-bar Charlie breakout continuation, those three signals here, you enter the market in this column I here. Okay, this is your buy stop limit price trigger, okay, for these three signals. All right, so for example, in the one we're looking at here in Apple, you got a 2-bar Charlie breakout continuation. So you enter the market at this price here, 341.78, and there you have it. Just that simple. Okay. The next column over, column O, is your 2-bar Charlie reversal. Okay. You do not enter the market here. This is not a buy trigger to buy the market. This is your intraday support. All right. If prices close below this, it is usually a bearish signal. Okay, it means that we have now a key reversal, if you will, coming into the market at that point. We'll talk more about that later too. All right, column P, you're familiar with that. That's where you put your trailing stop, and column Q is your initial stop loss. You use the initial stop loss when you first enter the market on a trade. Okay. If you're holding position overnight, this is where you put your first stop limit at. The close of the next day is where you will start using your trailing stop. Okay, and each day that you get your sheet, this price here will be indicated for where you should move your stop, if at all. But the trailing stop price is where you're going to use it. Quick note here: remember, in markets where there's been technical damage, or the market is trying to is in the process of reversing, like if you put in a major support or a bottom or something like that, oftentimes your trailing stop will be out of alignment with your initial stop. In other words, your trailing stop will be higher than the price where you enter the market at. In this case, you keep using the initial stop until the trailing stop drops below your entry price. Okay, it's just that simple. All right, you notice now that we have the column separated. All right, we have separators here. Like here, now we're entering into the alerts column. All right, you notice your high frequency trading bot check column. We added a new column, which is your negative momentum swing VIX. All right, a quick note on this column: the negative momentum swing VIX measures your downtrend channels in a security. You'll notice in the commentaries on the blog, where you look at the chart and you see the commentary, it talks about a downtrend channel was developed. That's what this does. And if there's a 1 here and it's highlighted in red here, that means that it's in a downtrend channel. High frequency bot check, if you recall, picks up pricing irregularities in the market. It also picks up selling pressure and secret selling, even in the options market. So it's a very ferocious algorithm. So you can have a negative momentum swing VIX. You can be in a downtrend channel and not have any irregularities coming back on the bot checks. Okay, this is a bearish signal, just like this is a bearish signal. So your bot checks are bearish signals, but your negative momentum swing VIX is also a bearish signal. Okay, you can have one without the other, or you can have them both. All right, but this, make no mistake about it, the negative momentum swing VIX is a negative signal. It's telling you you're in a downtrend channel. That is not, and that's where you are. That's where you live. Okay, it's telling you where the market is. The next new category is your high volatility alert. Those of you who've been with me for a while, you remember that the back on May 6th of 2010, you recall that week when we were doing the Goldman Sachs videos, we issued the high volatility alert. That's what this indicator is. If there's a 1 in this column, it's letting you know that you have a high probability of a flash crash for the next trading session, and extremely wide trading ranges, and very volatile, very choppy, huge whipsaws and things of that nature. So you can really set your watch by it. When you get a high volatility alert, it's letting you know the ranges are about to expand. There's going to be some big market movement in that security coming up for the next day. Rally alert differs from the high volatility alert. High volatility alert does not tell you about direction. It just tells you that it's going to be a very whipsawing, choppy, just wild swinging type of a market with ranges expanding. The rally alert, on the other hand, is letting you know that you have a possibility of a straight up market rally in that security for the next trading session. Likewise, the crash alert says the same thing, letting you know that there's a high probability of the market crashing on the next open. All right, the next category is your trend category. You have your bull trend. If there's a 1 here, that market is bullish. If it's a 0 here, that means that the market is neutral to bearish. The bull trend strength indicator, just like in the commentaries on the blog, measures the market's trend strength. If there's a 1 here, the market is bullish and trending. If it's a 0, the market is not trending and it's range bound. Even though the position of the market is still bullish, you are range bound. You're not hitting any new highs. You're not hitting new lows either, but you're not hitting new highs. All right. The next new column is also taken directly from the commentary. It's your bull market 12-month price projection targets. People always say, where do you think the market's going? How high do you think it's going? Well, this gives you the 12-month price target for any security that you're trading. The next column is your bubble phase signal. You've seen that in the commentary. This, if you see a 1 here, is letting you know that the market is on track for heading first toward the 52-week high, the 12-month price target, and it is in the market position, all things being equal, of possibly entering into a bubble phase. And then the next column gives you the bubble phase 1 price target and bubble phase 2 price targets. If you remember from prior videos, bubble phase markets are extremely rare. They do happen, but they are rare. So if you do hit it, then chances are once this price target is reached or somewhere near there, the markets usually top out in reverse. But in those rare instances that you hit a bubble phase 2, which is even more rare than a bubble phase 1, the markets usually hit this target in reverse right thereafter. So here are your price targets letting you know. Now the bubble phase 1 and the bubble phase 2 targets go as far out as 3 to 5 years, all things being equal. The next category is your bear trend, same indicators, bear trend and your bear trend strength. There's 0 here, so the markets are not bearish, obviously. And then you would have your 12-month profit targets there, and your bear phase, bubble phase 1 and 2. And that's when the market is under price destruction and distribution. All right, then the next category is your ticker symbol, and then commentary. We're going to be putting some things in here later on, but for right now, we're just going to leave that blank. The next section here is your fundamentals, okay? And then the next section is your the Ichimoku chart. This is taken right off of the commentary as well. And we'll talk more about that in upcoming videos. And then, of course, your last category on the sheet is your Fibonacci retracements. We'll also talk more about this too in upcoming videos as we talk about strategies and techniques and things like that. And so there you have it. That is your introduction to the sheet. And remember, take what you can and give nothing back.